Thank you for watching the Chain Trends Crypto Podcast. Today I have a very special guest with me, a adjunct professor of finance at USC Marshall and the author of a very, very good book about Bitcoin called Layered Money, Nick Bhatia. Thank you for doing this, Nick.
Thank you for having me. I appreciate it.
Yeah. If we could just start a little bit, can you just tell us a little bit about your background and what you do and how you got into Bitcoin?
Sure. So I wrote a book called Layered Money in 2020. I published it in January of this year. The book is about a history of money and a look into the future of money and how Bitcoin really plays a major and a dominant role in that transition. And before I wrote the book, I was working in the investment management industry. I was trading financial markets. I was trading US Treasuries and other interest rate products for a large asset manager. And I have a CFA charter holder. And so my background is in traditional finance and definitely a bond guy and an interest rate guy. And I, my passion is global macroeconomics and how the world works, how the global economy works, what are the trends and where are things going and how do we invest accordingly. So it all kind of led me to Bitcoin 2016. And by 2019, essentially, I was unable to keep my attention off of Bitcoin. It completely consumed me. And I saw the writing on the wall that this is the direction we're heading. So even though it might take many, many years, I knew that this is how I wanted to dedicate my time. So I've made the switch from being a bond trader to a Bitcoin writer now.
That's right. Now, your experience as a bond trader. How long were you a bond trader, and when did you kind of exit to become a professor?
Sure. So I was in the bond industry for about 6 years, and for the last half of it, I was in a trader and strategist role. So, you start with the low, jobs of it's really you're not doing investment management itself. You're doing more of the pushing of the buttons to right. It's called execution trading and that kind of you just paper pushing, really, to be honest. But then evolved into more of a strategist role where my opinion matters. It might not matter as much as the people above me, and it certainly didn't. I was just a lowly trader and strategist, but I did gain the experience. I got my call it your 10,000 hours or whatever analogy you want. I definitely got my experience as someone in the absolute middle of the capital market, like a participant right at the center of, uh, billion and even $1 trillion players. And just seeing the money move at that scale, dealing with the clients, dealing with the brokers, clients that are some of the largest public and private clients in the world. We're talking about governments and corporations, and then on the broker side, all the top shops, JP and Citi and everyone else. And I have great relationships still with the people on both sides of the equation. But it it's something that I'll always look back so fondly on, because you'll never get to learn how the Fed works or how the Treasury market works unless you're just sitting right there on the desk, plugged into your Bloomberg terminal, essentially 24 hours a day. Because even when you're off the desk, your positions are open. You're always in the market. So it was a great experience.
Yeah, and that's crystal clear in your book, and the way it's written. It's really complicated stuff, and you put it in a very digestible way. So I salute you for that. And that was the reason I wanted to talk to you so much is because this is a complicated topic, and it's incredibly nuanced. That just the average person, you tell them to buy Bitcoin, and they're like, "Why?" And you're like, "Well, and it's this whole thing." So it's a tough topic, and it's just not everybody is quite there yet. I mean, as far as just like the average people, right? So that's why I think Layered Money is such a good book. Can you tell us a little bit about like what is layered money? What is money in general first, and then what is layered money?
Yeah, so the question that you set up is really why I wrote it. So, you're like, you should buy Bitcoin, and they say why, and you have to have a reason, right? So the book that I wrote is the reason, right? It's the answer to why you should own Bitcoin. And when you really think about why Bitcoin is so special, you have to describe it as, a once in a millennium type of innovation. And so if you're going to make that claim, you have to tell a 1,000-year story to justify that sort of claim. And so when I went back in history to try to find when gold became gold, right, as we know it today, where it became just this global idea of value, just universally recognized as value, what we call in Bitcoin consensus, right? When did gold become the consensus money for the planet? And when I went to try to tell that story, that's how I stumbled upon, layered money and how to tell this story that Bitcoin is a once in 1,000-year innovation. It has nothing to do with PayPal. And if you compare it to PayPal, you're very confused about what this is all about. And so the book was really an attempt to kind of answer that PayPal question along with the gold question all at once to explain why Bitcoin is so special. And then what is layered money itself? Layered money is a way of describing how money and types of money fall into a hierarchy or a rank, and it's based off of what side of the balance sheet the monetary instrument is on and which balance sheet that is on, and the relationship of that financial institution with others. All of that falls into this layered system. And the layered system today in the dollar is extremely complex. It started as just a gold coin and a gold certificate, so it started in a very simple way. It's evolved into a nightmare type of scenario where it's very complicated and intertwined in its counterparty risk in terms of all the balance sheets and all the layers of money. And Bitcoin cleans that up and starts over with this fresh monetary asset that is in a lot of ways like gold. And while I think that Bitcoin is replacing gold in that way, it's still important to understand the history of our species and how we dealt with money and money substitutes, which is like the paper version of gold back in the day. So, but now there is no gold that anchors the dollar system. It's all a paper and a digital system that's a very complicated and multi-layered system.
You mentioned counterparty risk, and for clarity, I just want to make sure. Why is counterparty risk bad, or what exactly is counterparty risk, and why is counterparty risk bad?
Okay, so the average person has money in which form? Bank deposits, right? Your checking account. So your checking accounts with B of A, with Wells, right? And your money that you call money is a liability of Wells Fargo. For their balance sheet, the deposit that you think of as your asset is their liability. Okay? Now, what happens if Wells Fargo disappears tomorrow, goes bankrupt and shuts down? Okay? If you are under a certain amount, I believe it's $250,000 at the moment in your checking account, that money is insured by the federal government through an entity called the FDIC. Okay? So eventually, maybe in 24 hours, maybe in 24 days, or in 24 months, you'll get your money back from the government, from this FDIC fund. And it is a well-oiled machine, so sooner than later, you will get your deposit back. But what does that mean in the big picture? What is a checking account? It's just a deposit. It's just a liability of a bank. And if the bank goes away, and if you have $1 million on deposit, you just lost $750,000 if the bank goes bankrupt, right? That's why people don't keep large amounts in their checking account. They buy investment vehicles like money market funds or treasury bills or stocks or anything else. They buy assets. They don't keep it as they don't keep it on deposit, right? And so, um, you know, you asked a certain question, but I have to answer it with, what is the money that you keep? It's just a counterparty risk, right? Um, then how do you judge the counterparties relative to each other? Would you rather have a Wells Fargo deposit overnight that, it might disappear tomorrow, or would you rather have a US Treasury bill? Or would you rather have a JP Morgan money market fund that owns treasury bills and treasury repo? Right? There's all these different types of ways to own or to store money, right? To store dollars. And they all have counterparty risk that goes along with them. None of those instruments is a gold coin or some asset that you're holding in your pocket, in your house, under your mattress. They all have risk with their issuer.
Right. And now that brings me into the next part. I just now with the way the book is written, layered money. So can you go through, gold? You could use gold as an example, or Bitcoin as an example, and then go through the layers if you don't mind, and of today's legacy system. Like, where does my $5 bill that's in my pocket fall? My debit card, my Venmo, et cetera, et cetera.
Right. So the Federal Reserve is the financial institution that is at the top of the layered structure in the dollar system. So on the Federal Reserve's asset side, it owns US Treasuries. Okay. So the US Treasury debt instrument is considered the first layer of money in the dollar system. It is the form of money with the least amount of counterparty risk, because the counterparty is only the US government. Now, your $5 bill is a liability issued by the Fed that owns treasuries. So your $5 bill in your pocket is a second layer of money issued by the Fed that is backed, in theory, by the treasuries that they own, the US government debt securities that they own. Your Wells Fargo deposit is on the third layer of money, because Wells Fargo, as part of its asset base, owns Federal Reserve issued reserves, which are a second layer form of money because they're issued by the Fed, which are theoretically backed again by treasuries. So your deposits that you have is, in theory, this third layer of money that is issued by Wells, that is backed by the Fed's issued liability, which is backed by US treasuries. So that's the simple way of thinking about today's layered money system. Gold has nothing to do with it, right? The Fed doesn't own gold, and its deposits aren't backed by gold. Its reserves aren't backed by gold, and its paper money is not backed by gold in any way. In the Bitcoin system, we can think of this as, if you have a Bitcoin wallet with your own seed phrase or your own keys, the way you access the Bitcoin layer, then if you have that, you have a first layer of Bitcoin, because you actually have possession of your private keys, right? If you have Bitcoin on an exchange, right? You log into your bitcoinexchange.com, and you see on your screen you have a balance of 1.5 Bitcoin. that is, in this construct, in this model, a second layer of Bitcoin, because it's simply a liability issued by your exchange. It's just a balance like a deposit is.
Right.
So you hopefully can withdraw that Bitcoin to your own wallet to prove that it is yours. But until you do, you have a second layer of Bitcoin because it's just on the balance sheet of this exchange. So the powerful thing about Bitcoin is that you can get back to the first layer of money really quickly and with complete finality. Like imagine going from your Wells Fargo deposit on your screen to a gold coin in your pocket in 10 minutes. It's quite a powerful idea. And we need Bitcoin to be out there circulating to make it work, but also the ability to secure it for long periods of time on our person to ensure the, I guess, the beauty, the elegance of the system, how it's both a store of value and a medium of exchange at the same time. So gold was never able to accomplish that because you can't just send gold coins all around the world at light speed or even at a slow speed. It goes at a glacial speed, right? And so you need substitutes and all that. So Bitcoin is very powerful when you zoom all the way out from historical, historical context.
Yes, and the gold, the portability, right, and the divisibility too is difficult, right? Like, what if you want to buy a cup of coffee, right? You chip off how much gold, right? Like Bitcoin makes that very convenient, and crack that. Were you a gold fan before Bitcoin? Were you like a proponent for the gold standard or like a harder money before you knew about Bitcoin or before you got into Bitcoin?
So I was never a proponent for a gold standard because I think that's going backwards, and it didn't seem like something that was worth fighting for. It just never envisioned us going back toward a gold standard. Now, with that said, I owned gold because I thought that it was a proper way to express my displeasure with monetary policy, right? Which now I think I'm one of millions of people that have switched from gold to Bitcoin because it just the writing is on the wall that gold is not as good as Bitcoin in the role that it's trying to fulfill. Now, my wife can never wear a Bitcoin necklace, a necklace made out of Bitcoin. She still loves gold, and I think gold still has a value from honestly, there's a anthropological connection between human beings and gold that will never go away, and gold will never fall down to $0 per ounce or anything close to it. But that doesn't change the 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 hard truth here that gold has been completely replaced as a monetary treasure by Bitcoin. It's just not treasure anymore.
Yes. I agree 100% on that. And with that in mind, like I'm more interested in Bitcoin in the bond market and what can be done and how it can make improvements, improvements there. So can you elaborate a little bit, about the role that bonds play in corporate America, currently, and then how Bitcoin could fit into that and kind of improve or, improve that system?
Okay, so the bond market plays a very central part in corporate America. Um, Companies are perpetually borrowing from the debt markets to finance growth and expansion, share buybacks, and other sort of corporate activity. And the credit worthiness of corporate America, because if you want to talk about the top, let's say the top 250 companies from a credit worthy perspective, from a credit rating perspective, they never default. And so and the defaults are so rare. I'm not talking about smaller companies, or they're called high yield or junk debt. I'm talking about investment grade debt. It essentially never defaults. And so the yield, the return that investors can make above and beyond if they lent money to the US Treasury, with you have perceived default risk, right? You have credit risk, you have all this associated risk, but if you zoom out on a long enough time horizon, these companies never default, and they always pay back their premium to treasuries, right? And so
Right.
that whole system is very profitable to a lot of people. It's profitable to all the companies. It's profitable to the investors, and so it's just a major part, and it's to the tune of, so I ran the numbers recently. The size of the U.S. stock market is about 50 trillion, and the size of the US bond market is above that slightly, about 60 trillion or so. So, and the NYSE and the NASDAQ are about 25 each. The Treasury market is about 30, and the corporate bond market is, about a dozen trillion. And so it's just a huge market. And your second question was about Bitcoin. How does Bitcoin fit in to the corporate bond market, change the way that it functions? Um, Honestly, I think that Bitcoin and the corporate bond market don't have a ton of overlap. Now, you can take out the Michael Saylors of the world that are issuing bonds to buy Bitcoin in sort of a speculative sort of way, where they are betting on the price to go up as their core competency as a corporation. I think that's fine, but it's not something that I think is going to become, very common. Um, and and in terms of, how the bonds work themselves and pay back, that's where you start to get into, what the tech industry calls distributed ledger technology, software applications for the bond industry that can make it run more efficient. Because I can tell you as a bond trader that a lot of bank loans that trade, as they're not technically securities, but they do trade. When the security, sorry, I keep calling them securities, but when the loans settle, when you trade from counterparty to the other counterparty, they fax over, eFax or fax machine, actually the letter from the original bank that says you have ownership. It's a very old school way of doing things. So treasuries work a lot, more smoothly than fax machines, but the whole industry has room to improve from a tech standpoint. So you'll see software applications, and but on it really is a problem for me when people compare that sort of stuff to Bitcoin. They're so in such a different world. Bitcoin itself has little to do with the bond market, but you will see different sort of software applications that can be applied to the bond market. And honestly, a lot of altcoins will try to find their way into those markets to provide specific software solutions, tech solutions that Bitcoin really is not meant to solve.
Okay. You mentioned altcoins, but I wanted to get an understanding of where do you see CBDCs fitting in? Um, how do you see that all involving?
Yeah.
And do you see like a fiat digital currency, or do you think the CBDCs will service? And is Bitcoin a threat to any government like issued money, like the US dollar? Do you think that they view it as a threat?
Yeah, it's a really good question. I'll get to your second one, but the question about CBDCs, they're going to be introduced. European Central Bank and the Fed have already made it very clear that these things are in the works. The Boston Fed is working with MIT to roll out a Fed coin beta, and the ECB is well underway, and they're going to roll something out soon. So these things are happening already. They are, believe me, highly political in their nature. It's just going to be a different type of dollar that you own. So now you might not have a Wells Fargo checking account. You'll just have Fed coins in your Wells Fargo app, right? So it can change the relationship of how we have our cash type instruments. I think that the ECB might try to replace paper money, sooner than the Fed might try to. I think like the ECB could try to get rid of paper money and go digital euro in 5 years. It's not something I see the Fed doing in 5 years, but maybe in 10, right? If I'm thinking bigger picture. But the U.S. government has a lot to gain from FedCoin. The Fed has a lot to gain from FedCoin politically, and the ECB has a lot to gain from a digital euro from a power perspective. So there's all these things at play from geopolitical side, and believe me, CBDCs are a tool of governments for control, for power, for policy goals, and all that sort of stuff. Bitcoin threatens, I think, it does threaten fiat currencies and government's ability to tax over a very long-term time horizon. I think that certain governments like the EU are going to be way more cautious toward Bitcoin, where in the United States it's gonna unfortunately probably end up becoming partisan, where enough people, even if it's not 50%, doesn't matter what party, it's just enough people will love it and enough people will hate it, so it'll survive and just be contentious. But that's how America works. Thankfully, right? Thankfully, that's how things work here, where things just end up surviving, even if 75% of people hate it. Right? It doesn't matter because this is America. So I do like to think about how if you want to look at what will a government that feels threatened do about Bitcoin, watch Europe. It's going to be fascinating to see how restrictive they are and how they come down to protect themselves politically from the dangers of Bitcoin to them, their perceived dangers of Bitcoin. Whereas in the United States, it's like this is entrepreneur heaven. And people identify Bitcoin as an incredibly powerful technology, something they want to build businesses on. They build them, they hire people, they make money, they hire more people, all those people pay taxes. Everyone loves Bitcoin, and it's kumbaya. So I think America and Bitcoin are just like a match made in heaven. But definitely watch other countries, not talking about China. We know that they're on the other end of the spectrum from the freedom side, right? So we can expect blanket restrictions from countries like that. But, watch Europe, watch India to see how potentially friendly they'll be to Bitcoin. It's going to be a strong signal to the world because India doesn't just let anything in, take over. There's a lot of red tape in India. But if they green light certain things in India, that might be a signal to the world that, listen, we shouldn't just be scared. We should be open to our citizens building on top of this technology, much like the internet. So the Bitcoin has to be understood as a protocol. It's not a company. It's not political. And it's not controversial. It's just software. So it's part of what I'm writing about. I'll plug my own publication now. I'm writing something on Substack called The Bitcoin Layer. It's a research publication that I'm publishing. There's a free and a paid version. It's accessible to everyone. I'm writing stuff both on the free list and the paid list. And so all these topics in terms of where Bitcoin is going, the geopolitical ramifications of all these CBDCs and the game theory between fiat and Bitcoin, these are all the topics that I'm writing about right now at the Bitcoin Layer on Substack.
Yeah, well, I definitely suggest, and I'll put a link in the description for anybody who wants to just click. Nick is a brilliant writer. And I want to get into it in a second. It was an article I read recently that you wrote with time value of BTC.
Yeah,
But before I get there, what are your thoughts on with this as far as like the CBDC angle, in the current state of helicopter money or quantitative easing, that makes it much easier for them to do that. Is that accurate? Eh,
absolutely, and that's part of my thesis in the book, where I talk about central bank digital currencies as a form of the digital helicopter, I call it, and
Oh wow, okay, yeah,
and as a form of UBI. That's why I say it's going to be policy motivated. The government has a lot to gain by giving Fed coins directly to citizens
mm,
from a UBI perspective, because government gets power when people are dependent on their payments. So
right.
and it's how I think they'll roll it out too,
Mm.
to get it into the population.
Right. And the banks also would benefit if I'm understanding right, because when Greg Foss was on, he was explaining to me about like how banks get insolvent, I guess, and the way they issue, I guess, debt to they issue debt to or they issue they get big money from the government pretty much. They issue the debt and then they get like 20 times that or something.
Yeah,
Um,
so they are able to leverage it up, and so it actually comes down to something I talk about in the book, which is wholesale money versus retail money. The Fed has two types of liabilities. They have cash, which is paper money, and then they have reserves, which is cash but for banks. And what Fed coin can be thought of as a retail money. It will go into your app, and you'll have Fed coins. And if you work for the federal government, you'll get paid in Fed coins, that type of thing. But Fed coins for the reserve system for banks to leverage up is a separate
okay.
uh, application of central bank digital currency. We don't know which one the Fed is going to do. We and so it's very early, right? They're still writing
Right.
papers about this. The ECB, I would say, is about 1 to 2 years ahead of the Fed. So I'm looking at what Europe is doing. Europe has talked about how it is going to be a retail facing money. Um, but the Fed has talked a lot about how it will be a wholesale facing money where banks can use it to leverage up and all that kind of stuff. So um, Greg is brilliant. He has got way more bond experience than I do. So I would probably listen to him about how CBDCs will affect, I guess, bank lending. But I think one important thing to point out is that when you, um, let's say you work for the federal government, right? And you get your paycheck direct deposit to your Wells Fargo checking account, right?
Mhm.
You are going to pay Wells Fargo fees, or you're funding their balance sheet. Somehow, some way, Wells Fargo is making money off of you, right? By you just having an account open and you accepting direct deposit from the US federal government, right?
Mhm.
Um, when you have that deposit with Wells, they are using that liability to fund their assets. So you are helping them in their banking activity, right? You're part of their liability side. They use it for their asset side. The asset side generates money for them, cash flow, profits, etc. Now, let's say Fed rolls out FedCoin and it says all US government federal agencies, you pay your employees in FedCoin. And let's say the US Treasury develops an app, or even some tech startup is like, we're an app for Fed coins, right? You can have your Fed coins in our app and it's free to use. You fire Wells Fargo and you get your Fed coins in your new app. You never have to deal with Wells again. They never can make money off of you. But importantly, they can't leverage your deposit to engage in banking activity to go make money for themselves. So central bank digital currency does pose a threat to commercial banking itself.
Wow.
That is an important game theory that the Fed is well aware of. So is the ECB. If you go to the ECB's website, they're talking about digital euro. they are talking about right now how there will be a cap on the amount of digital euros you can hold, because above a certain amount, you're now threatening the banking industry because you're pulling deposits and making them not be able to engage in their activity, that they depend on you keeping your money overnight every night at the bank, right? They use that to leverage and make money off of that. So if you don't have that money in there, it's a threat. So banks are threatened by CBDCs. That is a relationship that must be watched. Bitcoin is the exit from all that. That's what people don't. They're like, oh, how does a Chinese CBDC affect Bitcoin? It doesn't. It just makes it more valuable because there's fiat money, there's government money, there's corporate money, and then there's Bitcoin, which is neutral money. It's not issued by anybody. It is distinct and it's separate from everything else. So, yeah, that's my take on CBDCs.
Okay, and now, as far as if we fast forward 5 years, 10 years, let's say 10 years, what is your anticipation? What are we looking at as far as like monetary networking, and where's Bitcoin, like, as far as layers go? Like, are we looking at like Bitcoin standard with a bunch of CBDCs, or is it like freedom of money? Or are they going to be rough on it? Like, what's your take?
Yeah, so I think that Bitcoin will, in 10 years, have a very large portion of the world that denominates themselves in Bitcoin, including corporations and including countries. The United States will not be, as a country, will not be in that group in 10 years. And the dollar will still be a powerful monetary network. What I do see is Bitcoin knocking off smaller currencies from smaller countries that just aren't able to hang in a dollar/Bitcoin world. There's very little ability to keep printing and printing money to keep up with all the other central banks. Because if we think about supply and demand and just basic foreign exchange relationships, if the dollar is created to the tune of trillions, but small little country doesn't increase their supply, the small country's exchange rate appreciates, it gets stronger, and that might be good for those people. They can go abroad and buy things more, but it really affects the competitiveness of that country on the global market, and that's what a currency war is. So we're still in the midst of this global currency war, and there will be victims, there will be deaths. And so I see Bitcoin stepping in at the margin where smaller fiat currencies are dying, or where companies and people in countries outside of the United States are choosing Bitcoin over the euro and over the dollar when engaging in international commerce. So the network of Bitcoin users in terms of businesses all around the world grows. The number of people using the dollar at the margin outside of the United States shrinks in relation to Bitcoin and other monetary tools. And I think that that's kind of the way that we're trending. I don't think you're going to see prices in Bitcoin at a very federal or national level. You're still going to have nations use currencies for their own political agendas, but on the internet, you will see things priced in Bitcoin more and more. You'll see Amazon pricing things in Bitcoin. You'll be able to set your denomination to Bitcoin from USD, and so the internet is so global, and Bitcoin is tailor-made for that. So on the internet, you'll really feel like Bitcoin is a global currency more and more over the next couple of years. 10 years, are you kidding me? the internet's going to be a Bitcoin world. It's like
Yeah.
Bitcoin will be the dominant currency on the internet in 10 years, without a doubt. But from a nation's perspective, they'll still hold on and, use currencies for their own benefit.
And what is the importance of, let's say, having a hard money, right? Like, why? Can you just explain a little bit why it's bad to do what the United States is doing right now with the constant printing and the elasticity of the money supply,
Right.
and how a sound money can impact society.
Yeah. So, as far as how sound money can impact society, I think that a lot of people have written about this. And so I point people to, the book that you have right behind you, Saifedean's The Bitcoin Standard. And, how can society benefit from a more sound money where people aren't just getting credit all the time? It's a very, spiritual type of discussion, something that, I think I believe in, that a more sound money can improve our society. So I'll just leave it at that.
Okay.
I genuinely believe it. But um, for why is it important for people to understand sound money, which is your first question? What is it? Just think about this idea that if you so I'm in my 30s, right? If you got $20 bill from your relatives, um, you know, when you were a kid, and you could have bought X, and today you take that $20 bill out of the, envelope that you kept it in for 20 years, what can you buy with that $20 bill today that you could have 20 years ago, right? It's nothing, right? Your purchasing power has declined for sure, and it's collapsed if you zoom out far enough. And so a sound money doesn't actually do that. It doesn't depreciate over time. It holds value over time. And so think about your checking account also, your short-term deposits. These things have negative time value. They decay in their value every day. And that's not something that you should hold. That's why people buy real estate or they buy equity in companies, because those things can grow over time. So, people already understand that the money that we have is not sound. That's why most people have their retirement portfolios in the stock market, because they don't want to keep it in a checking account. First of all, the interest rate is zero, but that wasn't even the case, 10 years ago, when you actually did have some interest. Sorry, not 10, but maybe 15 years ago, you actually did have some interest that you were getting in your checking account. Even then, people were still investing in stocks, because there's just a decay to fiat money in the way that our monetary system works. And so it's not a sound monetary system. It's not based on sound money. It's based on credit. And because of that, your short-term deposits have a long-term decay in their value.
Yeah, and I was gonna ask you to like summarize the time value of BTC. That article, that's such a good article. But I'll put a link in the description as well, so people could read it easily. You kind of did a little bit, but can you
Yeah, of
elaborate
course.
on that a bit more?
Yeah, so time value of Bitcoin is about Lightning Network. Lightning Network is a protocol that uses Bitcoin as its first layer, as its security, and it allows participants in the Lightning Network are allowed to send Bitcoin to each other instantly without having to use Bitcoin's blockchain settlement in the interim. So users of the Lightning Network can send, using smart contracts, can send Bitcoin instantly, and nodes in the middle of the network can actually route payments, charge fees, and make money. So, in this way, Bitcoin held in the Lightning Network can have a positive time value where you actually are accruing sats through routing fees just by providing liquidity to the market. Now, there is no free lunch, and it is difficult to earn, and it's difficult to out-earn your competitors, but it's completely an open system, and it's not difficult to set up and open channels with people. What will be difficult is actually earning the routing activity through your node, because there's competition everywhere. So, but the time value of Bitcoin is this idea that with Lightning Network, we have a counterparty free source of interest denominated in Bitcoin. And that is a very powerful idea. And it's an interest rate that can be referenced in future capital markets, basically like the U.S. Treasury rate is referenced for corporate entities, because they want to make sure that they're paying more than the Treasury is offering to attract capital. Well, Bitcoin borrowers will want to make sure that they're paying more than somebody can earn on the Lightning Network in a more risk-free type of way. Obviously, there is risk in every sort of economic activity. Lending money to the U.S. government is a risk. It's not risk-free, but risk-free is just more of a financial term that we use to describe the least amount of risk in one given system. So I view Lightning Network interest rates as that concept, and I wrote that in 2018, and that's what got me started in this whole career as a Bitcoin writer. So I'm thankful to everyone that read that article back in 2018.
It's a wonderful article. And then I have one last question for you. And then, after you answer it, if you could say, or if you want to talk about anything else, that'd be great. Is Ethereum money, or is other blockchains, it doesn't have to be Ethereum, any of these other like tokens or layer 1 blockchains, are they money, and where do they fit in layered money?
So anything can be money, right? It's where does it fall into the hierarchy, and what is the type of consensus around it, right? So the Indian rupee is money, right? It doesn't have value in every corner of the world. So I do view a lot of altcoins like that, where they might be money, they might have market value, but they're not as consensus as something like Bitcoin could ever be. Now, Ethereum is definitely the exception when we're thinking about altcoins. Bitcoin's market value north of 1 trillion, Ethereum's market value north of $500 billion. So it is showing that it has a strong market value, in dollar terms. Now, what's the representation of that all over the world, and how does it compare as money to Bitcoin? I think the jury is still out. I'm a Bitcoin researcher, so I can't tell you, about the characteristics of Ethereum and whether or not that qualifies it as money. What I can tell you is that $500 billion in market value is the market saying this is worth something. And it's also been sustained over, I think, about a 5-year time horizon now, where Ethereum has increased in dollar terms, which is shorter than Bitcoin, but longer than everything else. And so I think watching that life cycle is important too, when we look at all these other altcoins or forms of money. So I do think, though, that Bitcoin stands alone as the consensus digital money around the world, and that the burden of proof is still on anything else to replace it. So gold and silver coexist, right? They had for hundreds of years. So, we have to look at the market to give us the signal. Right now, with Ethereum at 50% of Bitcoin's market value, it's a pretty strong signal that it's something to remain in the conversation. So, but it is outside of my area of research. I get, people asking me about Ethereum all the time, and I am telling them that Bitcoin is my full-time job. It's my full-time focus as a researcher. So it's actually, I consider it almost a different industry from what I'm doing as a researcher and as a writer. And so go to Ethereum people to learn about Ethereum would be my suggestion.
And now as far as like on the layers, where would where would some of these other altcoins fall in terms of layered money?
So I think about it in terms of layers is either a price relationship or a balance sheet relationship. So obviously from one cryptocurrency to the next, there is no balance sheet relationship. There's a price relationship. And so on exchanges, what do you see? Do you see BTC priced in USD? Do you see ETH priced in BTC? Do you see ETH priced in USD? That will tell you what the relationship is between layers. And I think that it's not out of consensus. I think it's kind of commonly understood that Ethereum has priced historically in terms of Bitcoin from the exchange perspective and from the trader's perspective, where BTC is considered the base currency. I think there's people will poke holes in that and say that the dollar is still the currency that each one of them has a price relationship in. And so again, I think the jury is still out, and over time we will eventually learn the relationship between these layers and what is what. But for now, I think it is fair to say that Bitcoin is the ultimate pricing mechanism in cryptocurrency.
Great. Well, Nick, thank you so much for doing this. I had a great time talking to you. I learned so much. This was great. I really appreciate it. If you guys are still watching, thank you so much. Please don't forget to hit that like button. Subscribe for more content like this. Remember that this is not financial advice, and the purposes of this content are for education and entertainment. Thank you so much for watching. Have a great day.